Let's move on, bang on time. So we've done overall wealth, the new chapter on overall wealth. We've just looked at the new chapter in the book on infrastructure, and the next new/heavily revised chapter is on natural capital. So Dieter, we welcome you to discuss your chapter. Thank you very much.
I think they were clapping you. Clapping me before I said anything is a mistake. Okay, I will try to keep my comments as short as possible so we can have some questions and discussion. I want to start right at where we begun the day to explain why I think we should focus on assets. Then I want to explain what's special about this category of assets called natural capital. And then I want to briefly mention an aggregate capital rule, some accounting rules, and what a sustainable economic growth path would look like. Since I wrote the original paper, I've written a book on natural capital, and I'm going to draw quite a number of points from that discussion. So, and I should say, by the way, I'm chairman of the Natural Capital Committee, and nothing I say should be taken as the views of the committee. Let me start at the beginning. So we had an interesting little interchange, including with Helm, on this question of wealth and assets. I focus on assets for two reasons. One is it's informationally less demanding than wealth, and particularly comprehensive wealth. But secondly, because the question I'm interested in is a more restricted question than the traditional national income wealth accounting questions. So I start with an attempt to put as an aggregate level a point that Amartya Sen made in talking about capabilities and commodities back in the early 1980s. Amartya focused very heavily on the issue of whether we should focus on what a person can do or can be, as opposed to what he calls the more standard concentration on opulence, i.e. real income estimates. So the idea here is, what is the set of assets that we need in order to function in society, not what's the flow of services which aggregates into national income. So we may use these assets badly, we may not take the opportunities in front of us, but the opportunities might be put there in the first place. And if you think about it, that's exactly how the welfare state is designed. The welfare state in the UK was never intended to maximise utility. It was to provide a series of social basic primary goods which a citizen would require in order to function in the society: education, health, electricity, lighting, transport through the nationalised industries and so on. That's why assets are important. And then we move to what's special about natural capital assets. Well, in the traditional neoclassical approach, we just have a bundle of inputs, factor inputs, different kinds of capital. They're all commensurable. There are common units of input, and we use a marginal analysis to trade off these particular inputs to produce a particular output. So that's not roughly right, it's precisely wrong. Okay? Those are the conditions which are not met in thinking about what a sustainable economic growth path might look like. And here are the reasons. First of all, even within the marginal analysis, very few people now think that natural capital, biodiversity, etc., is substitutable one-for-one with any other form of capital. Okay? So it's not a one-to-one substitution. Even people who still want to keep the main neoclassical framework in place admit there might be some less than one substitutions that are there. That's the easy bit. The second point is that almost all natural capital does not come in marginal units. It comes in systems, ecosystems, rainforests, catchments, atmospheres, and so on. And just as within the climate change debate, talking about the marginal unit extra plus or minus of carbon emissions, and whether it's $27 a tonne or 130, detracts from the point. If you don't have a decent atmosphere and you go beyond 2 degrees, then all sorts of discontinuities happen. Okay? And we don't have a toolbox for looking at systems, and yet almost all infrastructure and almost all natural capital comes in systems, not marginal units. And so since it doesn't come in marginal units, putting all the units to substitute in a marginal way into a production function is precisely the wrong way to think about the problem. The third point, which many environmentalists make, and the point was made between strong and weak sustainability, is that quite a number of the other forms of capital are derived from natural capital and not the other way round. Okay? It doesn't mean all is, but it means quite a lot is. And that gives a priority for thinking that natural assets and natural capital might come somewhat ahead. And that leads to the final bit, that within the natural capital area and the renewables natural capital, there are some bits that are really critical. And if you take them out, the economy collapses. And so the question of whether you can sustain a level of economic growth through time, thinking about the discussion about the Hicksian expectation of consumption through time, if critical bits of the building blocks are removed, then it just comes to a crunch. And you might think, oh, that's exaggerated. But if you think in this century why these questions are important, we're on track to eliminate half the species on the planet before the year 2100, give or take 10 or 15%. We are on course to get well beyond 2 degrees. It's a point that Cameron's made in a recent paper. We've already got 2 degrees embedded in the capital stock. Now, you'd be brave to think that these are just marginal continuity points. So for all of those reasons, and a few more that are in my book, you should take natural capital as special and important. And in my book, I propose a natural capital aggregate rule. In fact, I propose 2, that we should essentially have as a matter of policy, that we should not allow the aggregate level of natural capital to decline any further. And I have a rule that incorporates both renewables and non-renewables, and a rule that's just on the non-renewable side. And what that means is not that you shouldn't damage natural capital, it means that any further losses have to be compensated for. And the compensation principle is very important. It's the core to property rights. When we talk about Pareto improvements, make any improvement as long as the gainers could compensate the losers. Well, if you own something, the characteristic of property right is that you do get compensated. If I trash your garden, if I damage your environment, I have to compensate by virtue of those property rights. And those property rights are public property rights. And back to the earlier discussion about the role of the state has a crucial role to play in that frame. Now, what would you do in this framework? Well, first of all, if you're in the assets game, like any company too, you'd have a balance sheet. And although we do have some whole-of-government accounts, if you look at the ONS's first initial attempts at creating an aggregate, a natural capital set of accounts evaluation, we're a long way from getting anywhere near what that balance sheet should look like. Can we do it perfectly? No. Is this rough and ready? Yes. But better to be roughly right than precisely wrong. If you have a zero valuation for these things, you know that your aggregate view of how to look at sustainable consumption through time won't add up. The second thing to say is these assets are assets in perpetuity. So depreciation is not an appropriate concept. We want the atmosphere, most of the biodiversity forever, for all practical purposes, and therefore we're in the business of looking at capital maintenance, and the adjustment to national accounts should be that national accounts should be net of the capital maintenance required to maintain the assets intact. If you go back to the presentation earlier about the financial position of governments, if you do that adjustment, and you do it for all the infrastructures too, which are also part of the building blocks in order to function in society, you will get very, very different results for where government deficits currently are. Or to put it another way, a very unfashionable way, it'll demonstrate that we are consuming beyond our capacity, or in the crude sense, living beyond our means, or at least our environmental means going forward. So the numbers matter because the restatement will lead you to a different conclusion about what current consumption could be for the current generation. Again, don't have to be perfectly right. Just ask some practical questions. If it was this big, the capital maintenance, what would be the consequence for your fiscal policy stance? What would you do if you had a sovereign wealth fund which was making up for the depletion of non-renewable assets? What would you do in those circumstances? Or put it another way, how big would the capital maintenance number have to be for you to change your policy response to where you currently are? And my view is you would find it pretty difficult to come up with a credible capital maintenance number, which wouldn't make a considerable difference to the way you do current policy. So I suggest that if you take the asset base as the way to think about this problem, don't try and do the real income problem, just work out what the core components of assets and their systems are for the economy to function properly. Identify, by the way, their deprival value. What would happen to the economy if you didn't have these systems? What would happen if you didn't have the railways? What would happen if you didn't have the water system, etc.? If you do that adjustment, then you can start to think about what the sustainable consumption path through time might be. And I would suggest it would require the current generation to significantly reduce their consumption for the benefit of future generations. Problem for some of our macroeconomist friends, but from a point of view of rebasing consumption so you can have a sustainable base through the next century, I think that's the appropriate thing to do. Thanks.
Glenn-Marie, you're welcome. The floor is yours.
Well, it was a very interesting paper, so now I'm sorry I didn't read the book. Hopefully it would have addressed some of the issues. One of the things that was really good about this paper is that it took it all the way through from the conceptual issues to the actual kind of policies, because often we have a gap between the two, and it's very useful. It also imposes certain practicalities on the conceptual framework, and it's important to address those as he did. Now, this was developed in the UK context, and there's a very strong recommendation that Dieter has made about maintaining aggregate natural capital intact, and a good rule of thumb for where to get started, identify those that appear to be closest to the risk of irreversible thresholds, and particularly focus on those. Now, so there are several issues, because I'm looking at this beyond the UK context. Number one, large number of countries, both high income, middle, and low. A number of issues come up here. One is substitutability. People have raised this now for decades, and we really haven't seen much actual operational progress on this issue. And I'm sure, of course, as Dieter said, people will agree that there isn't complete substitutability, but there is some substitutability, and you certainly won't go to any middle or low-income country and say that there isn't. E.O. Wilson recently has proposed that we set aside 25% of the Earth's surface, and I assume including the oceans as well, to preserve biodiversity. And it's a wonderful thing, and it's good that he's out there advocating, but it's not going to happen, not in our lifetime. So what do? I don't think we can totally throw out the substitutability. In any case, we still have issues. Even if you want to keep natural capital intact, the aggregate natural capital, how are you looking at substitutability among different types of natural capital? And even if you kept a certain area the same, it produces multiple ecosystem services. And this is, again, one of the differences between this capital and other kinds of capital, that it virtually always produces multiple systems, and it can produce them in different quantities, and how you manage it can produce more or less of another. So the issue here is a little bit more complicated, because one has to look at that aspect of it too. It's not totally clear then what it means to keep natural capital intact. Now, valuation. This has been going on, also a rather hotly contested issue, and in this whole revision of the SIA and experimental ecosystem accounts, the World Bank has taken on trying to deal with this issue of valuation. And you know, there are two different approaches, a demand, a supply. Typically, environmental economists have come at valuation by saying, what is the willingness to pay for a service, a good or service that's provided, not what would it cost to replace it. Obviously, in markets, if we were trying to look at what a market would produce, and increasingly through things like payment for ecosystem services, there are markets being developed, and the same for carbon as well. One would look at the intersection of the cost of supplying the service from various sources and the demand for it. And if the replacement costs were cheaper than the willingness to pay, that would be the value. That's what would be incurred. But it's not really a useful starting point, and one can come up with many examples where it would give you the wrong signal, the wrong value. It's also difficult when you're talking to people in government about policies, and you want to say, well, you should keep this natural capital intact, and they say, why? What is it worth? And you say, well, this is what it would cost if you didn't, or this is what it would cost to maintain it. We have to tell them what the value of the services are, which is not quite the same as the replacement cost. You did refer to this in terms of what the loss of services would be if you lose or somehow degrade an ecosystem, but that is somewhat different from replacement cost. So I think still this cost, how you value an ecosystem and its services is quite complex here. And the final issue that I want to raise is one of scale. Sustainability depends very much at what scale you're looking at, what might be sustainable for a globe, for a country, for a city, for a neighborhood is quite different. Now, looking at this from the national accounting perspective, and I'll just give you some examples from where we've been trying to implement this. The type of data you need depends on the policy question that you're looking at. The very, very local level kind of decisions about how to use something in a particular neighborhood or where to site a local park are not typically going to need national accounts level data. Higher level, higher ecosystem size, whether it's, say, a river basin or a large catchment, something like this, can start to fit in with national accounts concepts. So I think it's useful to think about scale and sustainability. Again, this is something that has been written about in the past, but in terms of where we're going, I think we know a lot more about this, and it would be useful not just to mention this in passing. And finally, on the data side, because again, with the ecosystem accounting, we've moved much farther ahead in the conceptual work than we have in actually testing it out, seeing what we can do and what's useful. There's been a tremendous revolution in the last few years in the remote sensing and the usefulness of data. And just since we started 5 years ago, there's an ability to measure the provision of certain ecosystem services using remote sensing for vast areas that will make this much more implementable, particularly in countries that have relatively low incomes and little capacity. Thank you.
Thanks very much, Claire-Marie and Dieter. So, discussion. We have good amounts of time. Marty, Michael.
Yeah, Dieter, you're being controversial here, and some of the things you're saying just don't resonate with me. For example, I see no reason off the top of my head as I run through a bunch of mental examples that there is any less substitutability among natural capital than there is among other kinds of capital. And there's lots and lots of examples, for God's sake. We used to, in the 1820s, 30s, 40s, ships went around the world scraping guano off of South American islands to be a source of nitrogen and some phosphorus fertilizer, and along came the Haber process, which fixed nitrogen, and that's the source of the nitrogen that's used in fertilizer. So there is a substitution. Or the copper ore, which is made into wires, has to some extent been overtaken by fiber optics. Or whale oil we were on our way to exterminating many of the whale species in the world. It was quite an intensive industry, of course, and then along came kerosene. So I don't resonate at all with this idea that natural capital somehow is less substitutable against or for than any other kind of capital.
Before Dieter responds, perhaps Michael, I think you've got a point on a similar theme from the looks of it.
Yes, so to make the exact opposite point, and I think, and what interested me about Dieter's presentation was that he started with Sen. And the interesting thing about Sen and the approach to say that there are a number of assets which contingently, but empirically provably, make a very significant contribution to welfare and to also to, on the ecosystem level, to survivability, to the nature of the natural systems, is very important, because this is where the concept of substitutability really comes from. It isn't that a particular bit of a whale can't be substituted by some other, so whale oil, by something else. That's absolutely the case. It's that there are natural systems which can't be substituted by human-made systems. We can't generate water outside the natural system. We can't generate the stability of the climate outside the climate system. We can't generate the multiple benefits of pollination, various other things outside the natural system. And similarly, we can't generate human welfare without a health system or education system. So there are some kinds of systems which can be valued then as assets which are core to human functioning. Now, there can be marginal substitutions between them and so on, but at the system level, there aren't. And those things that's a really important recognition of the way in which our welfare and economy is based on natural systems and also actually based on social systems. And the mistake that many economists have made here is about the commensurability of money. So you can value each of those natural systems through various different kinds of techniques, some of which are more or less plausible, and come up with them in a commensurate number, which is a dollar or pound figure. And that's quite a useful thing to do in order to avoid yourself simply using completely different values for different things. So number of school years as against the number of species doesn't help you. So you put them into money. That doesn't mean that then they are substitutable just because they are then in a common metric. And so the fungibility of money, which we assume, as economists often tend to assume, doesn't operate. The fact that you've put them into the same values doesn't mean that then you've got any dollar can be substituted by any other dollar. And this is an empirical observation about the way in which our human societies and our natural systems work, and it then leads to the kinds of rules which Dieter has set out, and which others, myself included, in environmental economics want to say. It doesn't mean there's no substitutability, but the point of these systems is really critical. And the fact that you value them in money terms does not mean they're fungible.
Great. I'm not sure they're exact opposite points, and I'm going to, if I can, come back to that. We've got Pushpam and then Willem. So,
Thanks very much. I really enjoyed your presentation. When we talk about assessment, accounting, and valuation of natural capital, we need to be clear and confident, that is true, but we have to remember the caveats and the complexity which Michael has raised. I'm lying somewhat between Martin and Michael. I mean, I subscribe to both. I know the problem Michael is raising, or the clarity and confidence Martin has. So I would like to illustrate three things why we should be, I won't say less confident, but certainly we should have proper caveats when we are talking about valuation and accounting of natural capital. If you include biodiversity as a part of natural capital, in many cases that is the case, then the scale and time varies a lot. Sometimes it is a fraction of seconds. The service which you are getting could range from fraction of seconds to the million of years if it is about biomes. Second, I think Glenn Mary has referred to that, data issue. I mean, it's a very good discussion, but when you go to the ground in the country, I think data is very, very basic. And on natural capital, forget about it. I mean, people have some timber or some fish stock or those so on and so forth, but the way we are understanding natural capital is I mean, the data is basic. Third is, again, I will go back to the scale issues. I mean, I have spent some 20 years at least, not more, with the limnologist and plant taxonomist. This pond could be a wetland. And this can also perform certain functions which will be part of your natural capital. That is also the case with bigger swamps and marshy lands and estuarine and coastal areas, of course, mangroves. And the attribute which essentially becomes the critical component of natural capital can vary from this pond to those million, billion hectares of piece of land. And that is also true for scenic beauty business or bioremediations or vector-borne disease control, what we call it, regulating services. Once you bring all those things in natural capital, an ecologist would tell you, and I'm sure you have Georgina Mace in your team also. I know you are not speaking on the part of Natural Capital Committee here, but still, they can tell you that then measurement has added complexities, what Joan Robinson or Maurice Dobb used to visualize when they were doing aggregation of capital and measurement. So, what I'm trying to say here, I'm trying to say a very simple thing. When we talk about it, valuation and measurement, we should be clear, but everywhere, whether it is policy brief, chapter of book, or policy recommendation, put proper caveats up front. I'm not saying don't move further or don't be confident, but at the same time, we should not be saying something which might come in the realm of flatly wrong. Thanks.
Okay, great call for caveats. Willem?
I think there were a couple of red herrings introduced here. First of all, the so-called fungibility of money, which actually should refer not to money, but fungibility of valuation, has nothing to do with substitutability. The whole world can be Leontief, right? Fixed coefficient in consumption and in production. You can still value things and add them together. What, of course, you will have is that there is one scarce factor in such technology, right? And the world keeps growing, then that thing its price is going to go up rather rapidly. So that's a complete red herring. Substitutability is an empirical issue, right? And I've been impressed much more with the incredible capacity for substituting one thing for another that technological progress makes possible, right? Then with the fact that we deal with complex systems that can be substituted. I mean, salt water, right, can be substituted for, in fact, transformed into fresh water with energy. When energy becomes cheaper, right, you have fresh water come out of your ears. So I think we have to be very careful about what deep empirical issues. No generalizations. We have to find out how substitutability is for another and how this is likely to evolve in the future. And so far, I think the non-substitutability of biodiversity and all that is, again, a conjecture, an interesting one. I'd like to see it established empirically.
Great. Before I give Deidre a chance to respond, I'm going to abuse my position for a second and just share a thought, which is that I think this point Marty and Michael made, I agree with Willem's point. This is empirical. But for me, the question is, where do you have prices and markets? And if you've got prices and markets in tin, it ends up being substitutable because the market system works. If you have prices and markets in this, that, and the other, you'll find substitutes. Once you've got a price on water, desalination technology will come in. So for me, the problem is where we don't have prices and markets, and we don't have prices and markets that are appropriate for systems of biodiversity. And as such, we're not getting tech progress to deliver the equivalent of a response to the destruction of the tropical forest system or whatever. So I think this is fundamentally empirical. Substitutability is absolutely critical. And the thing that drives whether or not we seem to have it at the moment is the presence of incentives to think our way through. But that's just my observation. Dieter, you've had a lot to react to there.
Well, it's very helpful. I'm trying to rewrite the chapter, so thank you very much for all the comments. Just two or three very quick points. And first of all, nothing I said that substitution wasn't possible. The point I was driving at, and it is ultimately a quasi-empirical question, was that when you do damage natural capital, you ought to compensate for that damage. Okay? Because the argument would be the damage to natural capital has gone sufficiently far, and that's a
so that's the point that I think Glenmarie may have disagreed with.
Yes.
Yeah.
But I mean that's the principle that I advance in the book, and I understand that other people think that, you know, I mean, you could ask the question another way. So how low do you think natural capital could go? And we could still have a really strongly growing economy. Presumably we could substitute for badgers or for the red kites that are overhead here, or the swallows, or the house martins here, or the pied wagtail that's nesting in the roof over there. We could substitute for all these. No, we can't. Okay? Then many of these decisions are irreversible. And the distinction I didn't have time to spell out in detail was substituting for non-renewables with prices, substituting for oil, substituting for tin, substituting for iron, technical errors, no difficulty at all. It's just to make sure that future generations are properly compensated for us having the benefit of depleting these resources. No difficulty at all. This is about renewable natural capital. This is about natural capital that nature gives us for free and gives us forever. The herrings keep coming until you extinguish them. And then the option is closed through time. And it's about systems. So I think it's a good argument. On the empirics and the incentives, you know, with systems, I wonder whether you could actually ever create an incentive set of decisions or interests for people to do, quote, the right thing, and whether these are ultimately public goods which the state has to make decisions about providing, and probably in the second category. But loads of other points, and thank you very much for all the comments.
Fantastic. Thank you very much, Dieter. Glenmarie, good discussion. And